Thanks very much, Johnny. From leaving a private equity role at Mubadala to building MidChains into one of the UAE's leading digital asset platforms, Basil Al Askari, founder and CEO of MidChains, has witnessed nearly a decade of crypto's evolution firsthand. He joins us today to discuss why he believes Bitcoin remains a strategic opportunity for sovereign wealth funds, how stablecoins are moving into corporate treasury operations, and why institutional engagement with digital assets is entering a new phase. Basil, welcome to the show.
Thanks for having me again, Rachel. It's been a while since I've been on with you.
It really has, and so much has changed. So let's jump into some of those things. You left a private equity role at Mubadala in 2017 before institutional crypto adoption was a mainstream conversation to start MidChains. Looking back now at nearly a decade building through multiple cycles, what's the one belief about digital assets that you've never had to revise?
So it's not one thing, but it's really two things that we built the whole business around effectively. The first and foremost is that we didn't want to take a perspective or a view on where the assets were going to go at that early stage of the industry. And so we wanted to build infrastructure that supported all of the technology and all of the financial innovation that could happen within this space and around this space. And second is to build inside regulation with a regulatory first approach. A lot of our peers in the industry, especially as far back as 2018, 2019, were still sort of building the business and then retroactively adjusting their business models to meet new regulatory standards that were evolving. Whereas we proactively approached our regulator and built our model around how the regulators were thinking about enforcing in the space and supervising the space.
Wonderful, and I do want to touch on some of those regulatory aspects a bit later and how we've seen those evolve, over the last few years as well. But a bit more on prices. You've publicly argued that current Bitcoin prices represent a discount and a strategic entry point for sovereign wealth funds. Walk us through that argument, and is that about relative value, or do you see a specific catalyst ahead?
Great question. I think it's a combination of multiple things, as these things aren't ever that simple, as we know very well. But if we look at sort of the cycle and where Bitcoin was at peak, typically when we go through a bear market, especially on Bitcoin, we expect to see a price correction of between 50 and 60%. We're almost there. We haven't quite hit that 50 or 60% mark just yet. And as far as kind of event-driven catalyst, I think everyone's waiting to see what will happen in the US with the Clarity Act. And I think that, could directionally impact either way. But, in the meantime, I think it's very hard for anyone to call a bottom at a specific price point. And I believe that because of this, we've had pretty stable pricing at around the 60 range. And usually stable pricing is a good time for larger institutions to begin accumulating. And accumulating over time rather than in one single big shot.
Well, that's an excellent segue to another question that I wanted to ask you on that accumulation from institutions. We know that at least one Middle East sovereign wealth fund is actively accumulating Bitcoin at the moment. What would it take for a domino effect across other sovereign allocators to actually materialize? Do you think it is price-driven, or is it driven by more of a herd mentality or looking to see what the other sovereigns are doing in this space?
I think it's all of the above. I think in order for an institution the size of a sovereign wealth fund or similar to amend their investment policies and build risk frameworks around investing in a new asset class, especially, Bitcoin or other cryptocurrencies, it takes a lot of time for those internal adjustments and those internal risk metrics to be calibrated for allocation to actually occur. It takes a lot of time. What helps kind of speed things along is when leaders in the space publicly acknowledge that they believe in an asset class and that they have a tested methodology for investing and allocating within that asset class. And having that sort of public visibility and transparency definitely can help push the herd along. The US regulatory sentiment around clarity and what might happen next could act as a catalyst, but I think what's better than this for at least from the herd mentality point of view is having a reference point look at to say, okay, this is how to do it right, and we're going to follow this methodology to at least execute on our strategy in a way that is compliant, fair, and as low risk as possible.
That's great. Thanks so much, Basil. And I know that, I mean, institutional adoption is a very widely used term, and you've actually written previously that the crypto industry needs to stop calling it institutional adoption. If that's the wrong term, what's actually happening, and how should we be measuring the real engagement with digital assets from institutions?
I think context matters, right? And so when I think of an institution, and when most people think of an institution, we typically think of an investment house or an investment company, whether that's a large fund, a sovereign wealth fund, a mutual fund, whatever that might be. But effectively, the objective is investment. And so I don't necessarily consider investment as a sign of adoption, because investment is allocation. And what institutions are doing is are allocating to appreciate the assets that they're holding and to essentially fulfill an investment thesis. When I think of adoption, I think more of the treasury rails, the stablecoin payments that are occurring, and the corporates that are looking to incorporate blockchain technology in various forms to enhance their existing operations rather than looking at purely investment. And I think that's the distinction I like to make. So allocation and adoption are both happening simultaneously, but in different forms and from different types of institutions.
So you mentioned there the stablecoin, and you also spoke about the importance of MidChains as building within this regulatory framework. So let's talk stablecoin and regulation. Stablecoins are moving from trading pairs to payments and treasury rails. Where does MidChains stand in this journey of serving corporate treasury use cases?
That's a great question. So we provide the execution and settlement layer. And so that's the point, let's call that the last mile for a corporate or a sovereign wealth fund to be able to access these types of financial products. And they do it through us. So the stablecoin treasury argument is something that's actually been very interesting, because over the last 3 years, we note that this has been by far and away the fastest growing client segment that we have among our corporate clients, and today has become actually the largest part of our business. So we're very much in support of treasury managers from corporations of all different sizes who are looking to incorporate stablecoins or other blockchain technology into their settlement regimens.
And final question from me. You have written that global crypto regulation is shaping a new map of winners and losers. Where does the UAE sit on that map compared to, say, a year ago?
That's a great question. I think obviously the geopolitical climate has created some questions around, what's the future going to look like for some people. But for those of us that have high conviction in sort of the long-term vision and the long-term future of what the UAE is building and what the UAE has created and how we have been part of that journey from the beginning, is a true international hub for blockchain technology to be used responsibly as part of different aspects of financial services. That could be investments, that could be payments, that could be lending, that could be tokenization. And I think pushing on all these fronts is creating that environment where global firms, not just local firms, can view the UAE as an international hub to serve multiple different markets, not just MENA.
Wonderful. Well, thank you so much, Basil, for joining us today. I think the last time we spoke was during COVID, so around 5 years ago now, and it's amazing to see how much the business has progressed since then. So thank you so much for joining us today.
Likewise, thank you again, and hopefully we'll be back again soon.